Hello everyone, Larry Leverentich for Ichimoku.co and ForexTraining.tv with a 4-hourly analysis for the Aussie dollar US dollar FX for the trading day beginning January 23rd, 2014. Well, the opening candle here was this first 4-hour session was a very bearish large black body candle, very strong selling coming into the market, with the market closing in a bearish manner down below both the Kijun Sen and the Tenkan Sen, and suggesting that there is good potential for this market to trade lower. The market's also trading down below the Ichimoku cloud, giving us a bearish market in all three timeframes. Looking here to the Chica span, that's just below the corresponding price action, so it's just confirming what we're seeing in all three timeframes. It does raise some doubt about the validity of the signals here, these bearish signals with Ichimoku, because we are very close to the price action, and I'd prefer to see the Chica span further below the price action to confirm the downside momentum that we have in the market, but not a strong confirmation of this, so we do have some doubt about whether this market will be able to reach its targets. Now, the targets that we have here are based on the pivot point areas, and at the moment this market has found support around the first pivot point support level at 87.94, and here we have this current candle that is developing in an indecisive manner around that candle. If that candle does finish as an indecisive candle, it will set this market up for a potential change of trend back to the downside and suggest that this market has done too much and is looking a little bit overextended in that first 4-hourly period for this trading day. If, however, the sellers do come back into the market, the second pivot point level is a fair way away from where the market's trading down at 87.38. So because of the volatility we saw over the past trading day, these pivot point levels have expanded out. The next pivot point level down below there is at 86.91. I doubt very much we will see the market trading down to that level. But if the market can rally and trade up through the Kijun Sen and Tenkan Sen and the middle pivot point level, we will have strong resistance from the top of the cloud. Now, I suggest it's unlikely that we will rally through that area. That is very strong resistance in the 88.41 down to 88.21, with those three indicators in that region, and will offer themselves as very strong resistance to this market. Now, just looking quickly at the daily chart, and here we see this current black candle developing. It may not stay like that, and if the market does trade lower to interact with the 87.69 level, we could see the buyers coming back in down around that area. But importantly, if that area doesn't hold, there is no major support for this market until the market trades down to 85.76. So this 87.69 level is crucial to this market. Now, I think this lack of support based on the peaks and troughs down below the 87.69 level really does illustrate how useful the pivot point levels can be, and in the absence of that other form of support or resistance, we do have some levels that we should be watching, and one here is this level that we're trading at the moment, and the next one is down around the 87.38 area. But here we are in a bearish market in the long-term, medium-term and short-term time frames. The very large black body candles suggest that the sellers are in control of this market in terms of the short-term dynamics in that even shorter time frame. At the moment, we are seeing the sellers lose some control and lose some of the downside momentum that they had. But I suggest there is a possibility that if this market does rally, we find resistance at one of those resistance areas, either the pivot point level, middle pivot point level 88.41, down to the Kijun Sen at 88.21, and then we see the sellers potentially come back into the market and sell the market off. That would be in line with the trend from all of the three Ichimoku indicators.